Good day to you, my trading friends. It's Monday, April 19th, 2021, and I have our third installment of Let's Buy Some Calls for you today. But really, besides just buying calls, really, we're going to be looking at Russell today because I feel like, yes, Russell futures are down 0.5%, but the market has just been continuing to, how did Tom Sosnoff put it today in his cherry bomb? Bubblicious? So, what I really want to do actually is try to answer or explore a question that a viewer had put in a comment a while back, and I totally apologize to this viewer. It was been a couple months since I tried to address this question, or that this question was asked, really. So, they want to know basically, when you define your trade, can you also set a target point to take it off? And we've in the past talked about good till canceled orders and whatnot and setting them after they fill. But can you use ThinkOrSwim's, I guess, powerful features to be able to set that right all in the same, order? So we're going to take a look at that today, and hopefully there'll be a self-contained video on this in the future. But let's go on into ThinkOrSwim now, shall we? Hi, my name is Neil, and this is Option Theory. I want to thank you so much for joining us today. We're looking at on screen here is, of course, Paper Money. It's simulated trading. It's my flight simulator that you can have access to, of course, as well. I have a playlist in the description below, getting started with ThinkOrSwim. But let's came here to do what we came here for, and let's take a look at the charts. We're looking at IWM, which is the ETF that tracks the Russell. You compare that to the other market indices right now, like Dow and Qs and all that stuff. You're going to see that Russell is lagging a little bit. So I think that's why we have some room. It's been sideways recently. I feel like maybe it has some potential room, and maybe the market will recover today. Maybe it won't. I don't know. But, this is sort of a test of buying calls as well. But really today, I really want to see this trade order situation. So normally we go to the Analyze tab and we test out our ad simulated trade and look at probability. So let's start off with that. We're going to be in the May monthlies with the 32 days to expiration. And we're going to come here to the calls, and the 50 delta calls, what we've been buying here, and seeing how that works. So if I go ahead and click the ask for this, I'll be buying 1. My order defaults are set to 1 now. Your default, by the way, is set to 10, so be careful with that. And then you can see here that we're looking to potentially buy this for $6.53. That's the natural price. You could, of course, look for a mid price on that one of, let's see, so that would be 40, that'd be 13, 15, so let's say 7 cents less than that, and that puts it at 46, right? So there's your mid price. You could buy it for that, right? So let's go on and take a look at the risk profile and see what we are at with that one. So set the date in the top right to May 22nd. And then we can set the price slice to break even at expiration. We know the probabilities are usually terrible with a naked call, like naked call. Just a long call, thank you. It is, I guess, kind of naked. You have defined risk, of course, for what you paid for it, and infinite potential for profit. But of course, at expiration, that probability is pretty terrible. But right now, of course, as soon as you buy a call, you want it to move, and you want it to move in your direction. So we're going to go now and set that price slice to break even at expiration, and we already did that already. It's 32%. All right, so not good. But we normally would right-click this trade, choose confirm and send, but in order to get the access to this feature that I'm looking for, we have to go to the trade tab and have to set this trade back up. So luckily, I've already gotten here ahead of time, cooking show style, and here is the 224. I'm going to click on the call here, the 50 delta call, same one as before, and you can see here the mid price here is 646. Look at that, right? You could penny it up to see if it fills. 647, see what happens. Of course, the market is closed right now, but we'll see, right? What I'm going to do actually is uncheck this. I just want it to fill, so that's a market order. And then what you might notice is actually yours is set to single order, right? And what I'm hoping this is going to work, and this is me testing out, this is me being vulnerable and learning at the same time here with you guys, going over here and choosing first triggers all. And then, so what this is going to do, I think, is it's going to hopefully make this order. And then once this order fills, I'm going to set up the next order that goes on, which I want it to set up a order to sell this call at a profit. Okay, so what I'm going to do now is with this first trigger all open, I'm going to go back to this same call I just bought at its market value, right? I'm going to click on the sell. You'll see I have a separate order and its link is manual here. And I want it to sell for $7. $7. Now, if the market opens and the price of it is $6.80, it's not going to sell, of course, until the market's willing to pay $7 for it. But that's a profit. I'm going to leave it set today to see if I can get that much in a day. I guess I'd be happy with making $50 in a day. That sounds good. But you could always change this to good till canceled. So you could set yourself a profit target and then let it go. Of course, you can also set yourself a loss target as well too, but I think we're going to save that for a different video. But here, I think to answer that question about setting it all up at once, this looks like this is going to be it, but we're going to test it out. That's why we do this. This is option theory here. We're testing out our theories, whether that's how to use the software or how to be mechanical in our trading. So I'm going to go ahead and hit confirm and send. Review the fact that we have max profit is infinite. The max loss is $6.53 if that's what we get filled at. I'm going to go ahead and hit send, and that's going to be in my margin account. And that goes over to the monitor tab into the working orders. And you'll see here that we have the two different orders, right? This one is triggered by this one. So very cool. Let's see what happens, my friends. If you're new to this channel, stick around for a moment. If not, if you're already subscribed, thank you so much. I know this is probably the point where you dip out. I give you a thumbs up for making it to this part of my video. Like I said, if you're new and you want to join us, there's a two-step process. We do cherry bomb trades 4 days a week. To get those cherry bomb emails from Tasty Trade, go down to the description. You're going to find a link there to sign up for their email list. And they have several. None of them are spammy, but cherry bombs give you 4 trade ideas a week. And we build out a portfolio using cherry bombs. All right, so you go ahead and join us by signing up for those. The second thing you would do is when you're ready, subscribe and ring the bell. The bell lets you get notified when these videos come out, and because they're trades in the stock market, you want to time those just right. So if I gave you your thumbs up, right, and if you feel that I've earned it, would you mind hitting that thumbs up? I do appreciate it. And until I see you in tomorrow's first cherry bomb trade of the week, everyone, may the market be with you.